Congress is giving up its July 4th holiday recess to get back to work on the nation's budget deficit. And now, if the debt ceiling isn't raised by August 2nd, the U.S. Treasury won't be able to pay all of its bills. We've been here before, but never quite so close to an actual default. This is what it looks like. Congress has raised the debt ceiling some 78 times just since 1960. And since the nation's debt reached the $1 trillion mark back in the early 1980s, government borrowing has been climbing at an ever-increasing rate. This is the most recent, just past couple of years in the fight against the financial crisis. Now, right now, the debt ceiling is $14.2 trillion. That's about 95% of the size of the whole economy. This blue line represents 100% of the size of the economy. We're fast approaching rates we have not seen since World War II and the Great Depression, when the size of the debt, the nation's national debt, was actually bigger than the size of our GDP. This is what economists call a debt crisis. The bottom line, America has become a borrowing nation. It always has been, but look at this. A bigger chunk of our dollar we are borrowing from overseas investors in many cases. 38 cents of every dollar that the United States government spends is borrowed money. If the debt ceiling is not raised in time, the U.S. could default on its payments, perhaps. That's the last thing the United States needs when it's recovering from a recession. Christine Romans, CNN, New York.